Hello everyone, it's Arnaud Delapierre. Today, we're going to talk about fatal mistakes to avoid in crypto trading. This market attracts many investors dreaming of quick profits, but growing your capital is never guaranteed. Sometimes we make blunders that can ruin an account in the blink of an eye. In this video, I want to share the pitfalls to avoid so that you can move forward with the most confidence. Sit comfortably, take a moment to focus, and let's discover together a concrete approach that will help you learn and progress in your journey as a trader. I will try to create a comprehensive guide to help you avoid potentially very costly mistakes. Let's address these topics directly so everyone can equip themselves with solid knowledge. To fully grasp the extent of the pitfalls, let's take a look at the major misadventures that have marked the crypto world. Some painful memories date back to when volatility would explode overnight, leading to a wave of liquidation. Often, such failures stem from disproportionate risk-taking, from a lack of understanding of the asset or poor reactivity. Traders have lost fortunes not necessarily because the technology was unreliable, but because they didn't have a solid strategy. Understanding these past mistakes allows one to turn the situation to their advantage and avoid falling into the same traps today. By closely examining these stories, we observe that panic and a lack of preparation have often worsened the disaster. A common trap is the lack of discipline. Sometimes one jumps at the first opportunity that seems profitable without even checking the price history or the real interest of the project. Excess emotion is another major hindrance. FOMO, euphoria, panic, all of this clouds judgment and leads to impulsive decisions. We often forget to establish an entry plan and exit. Once things go wrong, you find yourself stuck, unable to cut your losses or change direction. The mindset plays a fundamental role in success, so do not neglect it at all. Before diving deeper into our advice, I want to tell you about Notrade. Available on iOS and Android, this free app provides particularly reliable trading signals and can help you scan the market without wasting too much time. You will find precise tracking there. C'est les well-designed alerts, whether for crypto assets, ETFs, or traditional stock exchanges, and an interface that will be user-friendly to spot opportunities more calmly. Its ease of use makes it a very good ally. If you wish to have smart tools to better manage your positions, I sincerely recommend it, so do not hesitate to try it as soon as you have the chance. Now let's get back to the major mistakes to avoid. First, we can say that the absence of risk management is often the first pitfall. Betting more than one can afford to lose leads to disastrous situations. Too many investors let leverage take over without measuring the consequences. Having a risk management plan limits the impact of a bad trade and avoids complete liquidation. When the markets are in turmoil, you must know how to protect yourself and preserve your reserves. Even in the event of a sudden drop, you will not find yourself completely out of resources if your allocation strategy is solid. Another big mistake is neglecting to research the project you are buying into. Far too many people see a token rise and invest without knowing what truly supports it. However, without a solid foundation, an asset can collapse as quickly as it rose. Therefore, it is necessary to understand the concept, the team, and check if the community truly supports the development. If the fundamentals are shaky or communication lacks clarity, be cautious. An optimistic chart does not guarantee that the asset will continue to thrive. Stay clear-headed and analyze beyond the mere price to avoid unpleasant surprises. Impatience is also a big poison. Many want to see the investment explode overnight, which creates expectations are unrealistic. The market remains inherently unstable and volatility can be extreme. Instead of aiming for instant profit, consider your goals over different time frames. Learn to be patient and adjust your positions methodically. Jumping from trade to trade based on rumors or whims often ends poorly. You must know how to give the market time to evolve and not chase every fluctuation. Patience can really save a portfolio. Blindly copying tactics seen on social networks is also a huge risk. What works for some may not necessarily work for you. Each trader has their profitability, risk tolerance, and style. Aligning with an influencer may seem appealing, especially if it shows enticing returns. But no one sees those losing trades. It is preferable to develop your own methods in line with your objectives and psychology. Training and feedback can be valuable, provided you adapt them to your situation to progress consistently and avoid poor decisions. The fear of missing an opportunity often also leads to mistakes, perhaps even monumental ones. The famous FOMO can push one to enter the market at an ill-chosen moment, when the price is already at its highest phase. Once inside, the pressure builds up, and this tension sometimes leads to rushed sales at the slightest dip. Chained to this anxiety, one easily falls into overtrading, multiplying positions without real logic. To avoid that, one must learn to set filters and identify the right moments, favorable moments. Keeping a cool head is essential to avoid chaos. Another often underestimated point is the news and the global market climate, regulatory announcements, macroeconomic news, or statements from major institutions can influence the fluctuations of Bitcoin and altcoins. Some traders never look at the news or major events, then are surprised to see their position shift abruptly. Certainly, we cannot predict everything, but staying informed still allows us to anticipate certain movements. Following economic calendars or official publications is not very complicated and often gives, I think, an advantage in decision making. Do not underestimate the impact of information about your operations. Many beginners also skip protective orders. I am talking about the stop loss, for example, which can prevent you from watching your capital decrease dramatically in the case of a crash, a sudden crash. Similarly, a gain target must be planned to know when to exit to benefit without trying to squeeze out every penny. If there are no set guidelines, greed or fear will take over and make trade management chaotic. Adopting a solid routine can make a difference. Decide in advance the price at which you will cut your losses and the target where you will take your profits. Another common pitfall is betting everything on a single asset, especially when the hype around a crypto becomes viral. Putting all your eggs in one basket can create a snowball effect in case of a drop. It's better to spread your assets across multiple crypto assets. I feel like saying reliable crypto assets, even keeping a portion of your capital in liquid form as stablecoin. That way, if one collapses, the entire portfolio is not held hostage. The idea is not to spread oneself too thin without thought, of course, but to build an allocation that considers the risks. We sleep better knowing that everything doesn't rest on just one part. Once the basics are laid, it's important not to rely solely on signals or external opinions. Even if a reputable person talks about a project, conduct your own research, learn to interpret charts and identify key levels, and adjust your money management. Nothing replaces your judgment. Without this autonomy, you risk constantly relying on rumors and making impulsive moves. Get into the habit of questioning trends and deepening your knowledge. This self-sufficiency will help you forge a more robust and less fragile trading style. If you appreciate these tips and this approach, consider subscribing to the channel and liking the video. It really helps me to continue providing quality content and to engage with you. Also, don't hesitate to activate the bell to be notified as soon as I post a new video. I want everyone to be able to progress and break free from common mistakes. Sharing in the comments is also welcome. Share your own experiences, your difficulties, or your successes. Together we can help each other and strengthen our understanding of crypto trading in the long term. To conclude, remember that crypto trading can be both very exciting and very dangerous if you are not prepared. Past mistakes are not just for anecdotal purposes. Touch the data, they show us the way to better approach each opportunity. Dedicate enough time to research, design clear plans and actively manage your risk. Nothing guarantees automatic success, but reducing mistakes increases your chance of success and preserves your capital. I hope this video has helped you see things more clearly. See you soon for a new topic.